Welcome, ladies and gentlemen, Commodity TV today in Liechtenstein, and we are here at the offices of SSI Wealth Management, and with me here is the partner and fund manager Florian Siegfried, and we want to talk about gold, silver, the markets, and of course his fund and how they are different. Florian, good morning. Thanks for taking the time.
Welcome, Jochen. Pleasure.
Yeah, gold and silver, Corona, it behaved a bit, funny, I would say. What are your thoughts on that?
What I think is in March with the whole outbreak, it was the classic reaction. We had forced liquidation in most everything, including gold. The sad thing was that you have to sell assets that you don't want to, but you have to because you are on margin. I think that was the sell-off in March from which we recovered. And I think what has emerged of the whole pandemic is a huge probably shift in monetary policy, whereby governments have their foot now on the pedal to print in a way that the economy is contracting. So actually, when you look like lending out loans, reserves, they should be contracting too. But what happens is actually the broader money supply is not contracting, and that tells me the government is now actually officially in the game of printing by using their central banks. And so as for you and for us as investors, what does that mean to your investments? Holding fiat paper is probably not such a good idea. And, if it comes to your motivation, whether you should sell your gold in such an environment or whether you probably want to add to your position on the dips, I think you can answer this question probably rather in favor of the second. But I think this is what we are seeing. It's a long-term trend. Investors are scared. They're buying the dips. They're just in unknown waters, uncharted territory.
Absolutely. So how has your fund, let's say, behaved? What have you changed, or you might have changed, and what distinguishes you from other funds?
We think the world is in this strategy of passive investments where basically investors don't really look at the fundamentals anymore. It's just you want to invest at the lowest possible cost in whatever asset class you are. And we think what that leaves to us is a market that is highly inefficient in a way that the liquid market cap blue chip stocks, whether it's gold or silver or copper, whatever, they get a bit, while the rest of the pack, which doesn't fulfill those criteria, is left out. Doesn't mean that these are bad companies, just means they are not attractive to investors because they're not too big enough. So we thought our strategy in the fund is let's focus. We have to swim with the storm because it's obviously a good market. So we want to keep a good portion of our investments in the mid-cap names and in the small-cap names. So with an average market cap of, let's say, $2 billion US dollars. But on the lower end of the side, we want to actually deploy capital to professional, diligent mining people, to smaller companies, which actually have a plan, have a good asset, have something to develop, but they are lacking the capital. And we have...
And they want to execute.
They are ready to execute, but probably you just have to kickstart the project by probably putting, instead of 3 million, you want to put in 6 or 7 million into the project. Because this is the market where a good drill hole gets your attention. So you should not hold back your news flow. But so we try to intensify that on a very selective basis with a few companies. And these are probably, regularly smaller allocations for us. It's less liquid, but we think the potential, and based where the value is of those companies today, there is more upside than downside.
Fantastic. I think a great example of your strategy is Victoria Gold. I mean, you have been a long-term shareholder of the company, right? And now company is production and produces free cash flow.
Yeah, it has been a long journey though, but I think it eventually started to pay off. It has been... Eagle has been under construction for the last 2 years or even more. There has been some changes in the registry before Cisco exiting their position, so that created some woes in the market. But the project in the end is ramping up nicely.
And making money.
And is making money,
Yeah.
and also they're using their cash to repay the debt, which I think is very important. So you have a catalyst of starting creating cash flow, you're meeting your guidance, you delever your balance sheet, and probably you start to redeploy some of that cash into some exploration targets. So it's a whole range of catalysts that we think is so important in that market to get your share moving.
Fantastic. Let's say from on a smaller scale perspective, what would be an interesting example for your investment strategy?
Well, for example, we provided some funding for a smaller company called Anaconda Mining in Atlantic Canada, specifically for exploration drilling on their two assets, Goldboro and Stover, high-grade systems where we thought these are the sort of assets that you can more aggressively drill today rather than, holding back with your program to save money. So we offered them flow-through funds, and so that program is up and running.
Super, perfect. And so you can probably harvest in, let's say, 2 or 3 years, hopefully.
We hope, yeah, we hope.
Great. If we look at a little bit larger market cap, you said average 2 billion. I think something like Oceana is really fitting well into that. But we know Oceana, this year was a little bit flat. So what's your take on that? Because I think it's one of the large positions in your fund.
We continue to buy on the dip, not because there is some, short-term growth opportunities, rather because we think the stock has been depressed to a valuation where it's just too cheap to ignore. Hale had its issues in the first half of the year, which we knew. They were mining the lower grade zones, and now they have to access the higher grade zones. And so guidance has been revised down. Last year was a very challenging period because of the communication, how they managed to communicate the whole New Zealand situation to the market, which was really unfortunate to some degree. And there is still a big question mark on the DPO in the Philippines. God knows when that thing is coming back. But overall, you have an asset, you have a company with solid assets in safe jurisdictions. I think if you would slice and dice the company into its parts, the market would probably buy more for it than the entire thing right now. So this is why we rather see it as a valuation play right now.
Yeah, absolutely. And I think with Warhay, Macros, etc., I mean, the things are moving extremely well, and the company is making money, and that always helps, right?
Yeah, they're making money. Their balance sheet, they have to look after it. So they sold some gold forward, but that limits the upside a little bit. But we have seen these turnaround situations all the way years down. And usually, if things eventually in the way they want or you want them to evolve, you can always outperform with those things.
Absolutely.
But timing is of essence.
Time is on our side and the market too. Last question. The last time we spoke with each other, it's probably 3-4 years ago. And now the market a lot has changed. We have been already at 2,080 almost in gold. Silver was at $30 again. So what's your take on that, let's say, by end of next year?
Well, end of next year, I think we will be again above 2,000. I have actually no clue what gold is going to be. I can only say fundamentally, I'm rather positive than negative. In the short term, though, the dollar seems oversold. God knows what the bond market is doing. I think that's the real big question mark. With the first pickup in the 10-year treasury from 0.53 to 0.7 something. It has been a spike, not dramatic, but it looks like how long can bonds trade where they are, and how long can you really depress yields and make investors buying negative real rates? I think that's the broader question. But whatever happens to the bond market, I think if the bond market gets into trouble, it should be good for gold too, because then there is no escape there anymore. And it's the biggest marker of them all. So it's like you have, pots of capital, whether it's in the bond market, in the equity markets, in the base metals market, and in the gold market. So it's just a question, you're moving water from one pot to the other. Where does it flow? And I think for gold and silver especially, it takes so little to move markets because it's such a small market that whenever money leaves the bond market, I would say a small portion is probably going into the precious metal space just for safety reason.
Yeah, exactly. Yeah, and insurance, I would say.
And insurance, and you know, the argument that gold does not bear an interest.
Who cares?
Is I think it's done because bonds are, you know, it's a guaranteed risk to lose money if you buy at a negative yield or a real rate. Yeah.
Exactly. Yeah, that's right. Super, Florian. Thank you very much.
Welcome.
And
Thank you.
Wish you all the best, of course. I think we are in front of a good decade. Yeah, as it looks to me like a little bit like the golden decade, or what I said, it's a decade of the commodities. And I think we're going to have the next year some big fun.
I hope so. It's going to be volatile, but we get used to it.
Absolutely. Thank you very much. All the best.
Pleasure.
Yeah, ladies and gentlemen, that was Florian Siegfried, partner of SSI Wealth Management, and you heard it. Absolutely positive for gold and silver, also for commodities for sure. Yeah, interesting investments like they have in the fund, and the fund is doing extremely well. And we like, the approach, how they handle their companies, how they handle the markets. This is quite different than instead of only buying, let's say, the large caps and then you are fine. No, they are really looking at the projects, at the management, and they are giving extreme companies which are really looking good for the future. They give them money, and I think this is the right approach, and actively manage. This is what we like. I would suggest you check it out. Thanks for watching us, and bye-bye from Liechtenstein.